So, you're ready to enter the world of investing, but you're not too sure where to start. You've got a bit of money saved away, whether that be a few hundred or a few thousands of dollars, and you want to be a smart human being. You want to put some of your cash into some investments to start building your wealth and making your money work for you. You've had a look at a few investments such as real estate and the stock market, and you've decided that the stock market is right for you and you're looking to invest in the stock market or individual stocks, and you're just not too sure where to start or how exactly to go about it. Well, I'm so glad that you clicked on this video, because in this very video I'm going to go through everything that you need to know and everything that you need to do to be able to get started in stock market investing, to be able to buy and sell shares in separate companies or buy into the stock market, invest into the stock market. Also, we'll go over a few strategies you can use with stock market investing. And the sooner that you get into investing than later, you're just going to be able to build your wealth and financial security and be very well off in the future. So just before we do get into everything that I am going to cover in this video, as always, if you could please hit the like button, I would greatly appreciate it. Hit subscribe down below as well to stay tuned and continue to watch more of my content. Would be awesome. Almost at 200 subs, so hit that button if you want to watch more and get me to 200 subs, yeah? So now that you have accumulated a bit of money there and you're looking to get started in stock market investing, you actually need a platform that will let you be able to buy and sell stocks in the stock market. You know, an avenue that will actually let you buy and sell shares in individual companies. And this is done through what we call a stockbroker. Now, if you're new to investing, when I say stockbroker, you probably think back to the old days of stockbrokers on the phone to their clients, listening to what stocks they want to buy and sell, and frantically running around trying to buy and sell stocks in time for them at that price. A bit of chaos going on. But it isn't like that nowadays. No. Nowadays it is pretty much just all automated through computer systems, and you can pretty much just buy and sell stocks on your computer or through a mobile app. You put the order through and the computer does it for you. But obviously these websites and these platforms are run still by brokerage firms. They obviously just don't have employees that have to sit there and take calls to know what stocks you want to buy and sell. Now obviously you're going to need to make an account with a brokerage firm to be able to buy and sell stocks. You will put in the order for them and they'll buy your stocks for you or sell your stocks for you at your said price. And you pretty much have to choose the stockbroker that's going to be right for you, or that's going to work best for you. There are plenty of different ones out there that all come with different business models. For example, there are some brokerage firms out there which charge you a fee every time you put in a buy order, or every time you put in a sell order, every time you pretty much buy or sell stocks, which is pretty much like a commission fee that they charge for actually allowing you to do that. There are some that have no fees for buying and selling stocks, but also they may have fees elsewhere. Just a quick example, if you're obviously only probably looking to invest a small amount of money, say a few $100s or something like that. Let's just keep it simple. For example, you're looking to invest $100 in stock A, and the brokerage firm charges you a $10 commission fee for buying $100 worth of that stock. Now, you are going to have to make a massive return on your investment before you even break even, because you've just put $100 in. Your cost for actually buying that $100 worth of stock is $10, which is 10% of $100. So you're actually going to have to make 10% just to break even. Whereas, for example, if you put, say, $10,000 in, and they're only going to charge you a $10 fee then obviously that's like a 0.1% that gain that you have to make just to break even. So if you are looking to just invest, say, a small amount of money there, you probably would be looking at a brokerage firm without any kind of commission fees or something like that. But that's just one very simple example there. There are some brokerage firms out there, or some brokerage accounts, where you need to have a minimum deposit limit. So say, for example, they may not let you fund your account unless you only put $1,000 or more in. And there may be some brokerages out there which say you can't withdraw any less than $1,000 at a one time. And obviously there are just some brokerage firms out there that offer different features and different benefits than others. That's what I mean. You need to really do your research on a few brokerage firms and find out which one is going to work best for you, so you know with which firm you're going to open your brokerage account under. It's really just about doing your own research and deciding which one's going to suit you best. For me, I'm Australian, located in Australia. To buy Australian shares, I use Westpac in online investing. Westpac is pretty much one of the biggest banks in Australia, so I just use their platform because it's nice and easy to use. They have a mobile app, and I already banked with them before I got into the stock market, before I started buying shares, so it was nice and easy to do. However, anytime I want to buy or sell stocks, they will charge me a $15 commission fee. And for investing in the US market, I use a platform called Stake. Now, Stake is a pretty cool brokerage platform that allows Australians like me to buy and sell US shares in the US stock market without any kind of brokerage fees or anything like that. The only fee that you really do have to pay with them there is when you actually fund your account, they will charge you a foreign exchange fee for converting your Australian dollars into US dollars. That's how they make their money. But that's really the only fee that it comes with. So it does work pretty well for me. If you're not from Australia, I think you can also use it as well. But yeah, it just really works very well for me because it's nice and easy to be able to buy US shares. Very easy to use. They do have a website as well as a mobile app that I just normally always use. I check it every morning, the mobile app. And after you've done some research, if you do decide to use Stake as your brokerage firm, you can use my referral link that I have in the description. If you click that and sign up with that and the code on screen here, I believe, you will get a free stock when you open your account and fund it. I also get a free stock out of it also, so it does help me out. I'm not getting paid anything to say this stuff about these two firms, by the way, either. But yeah, just in summarisation, firstly, you really need to find the right brokerage platform that's going to work best for you. Once you've got your brokerage account all set up though, you really then need to decide how you are looking to invest your funds in the stock market. Whether you're looking to invest passively, which means just contributing an amount each month into the stock market and forgetting about it, just letting that money work for you over time and grow over time. Or whether you're looking to actively invest, do your own research on individual companies to determine whether they're going to be a massive company in the future or not. We'll cover them both here, both passively and actively. First, passively though. Now, if you are looking to invest passively, you'll probably be looking at putting your money into an ETF. Now, an ETF stands for Exchange Traded Fund, and an Exchange Traded Fund is pretty much a massive big fund that you put your money in that is like a collection of stocks. Buying one allows you to be invested in a whole range of stocks for a lot cheaper of a price than say buying one share in each individual stock. And I guess the purpose of an ETF is just to have your investment track exactly what the stock market does. Now you can buy ETFs that track a whole bunch of things, but for example, just in this purpose here, we'd be looking at stock market tracking ETFs, which pretty much just replicate exactly what the whole stock market is doing over time. So basically, if you're buying into an ETF, you're just buying into a group of stocks and it will keep pace with the stock market over time, and you'll see the usual average return of the stock market. Now the passive investing style is, I guess, just more for someone that wants to put money aside into the stock market every single month, set and forget about it. They're not really interested in doing the hard work, doing the research to research individual stocks. More of a set and forget mentality. And if you do this, then yeah, on average after inflation, the stock market does manage to generate around about a 6 to 7% annual return. So if you just keep your money in a market tracking ETF, you should see on average a yearly return of 6 to 7% on your money. Now over say 35 years, this definitely adds up. Look what I have on the screen here. If you invested $600 a month, each and every single month, into the stock market and you average a 7% return, then in 35 years you'll end up with nearly $1 million, just short there. That light blue is all gains. Dark blue is what you actually put into the market. Pretty easy retirement plan, right? But what about if you actively invest? Now, if you're looking at actively investing, it means that you are looking to invest in individual stocks or individual companies. You're actively out there researching individual companies to determine whether they're a good investment or not, and whether you're going to see a good return on your money by putting your money into these companies. And obviously this takes time and research and hard work. Obviously your hard work will pay off eventually. If you can continue to pick great companies to put money in, over time you will see a lot higher average annual return than what the normal, just the stock market does on average. If you can find great stocks, then you can beat the average annual return of the stock market. But yeah, obviously you have to be dedicated, you have to put in the work. If you can do that, then you can obviously get a lot higher than an average 7% return each year on your money. But yeah, let's just run a few numbers here to see if you were to get a higher return than the market, what your money looks like after 35 years here now. Let's say you get a 10% return on average each year. Looking at that same example of putting $600 a month in every month for 35 years, with a 10% yearly return, that bumps your end number all the way up to $2.7 million. And let's just say you got a 15% on average return each year. Let's just say you're a really good stock market investor. That bumps your end figure after 35 years all the way up to $8.8 million. So you start to see how powerful investing is and its compounding effect can be. Obviously we're only getting a few percent higher, but look at the difference in returns. It's massive. And that's the compounding effect of investing. It's brilliant. You can start to see, if you put in the time and you put in the effort, you can grow your wealth massively using the stock market. It's a very powerful tool. And with the two investing styles that I've talked about there today, passively investing and actively investing, you don't have to be one extreme or the other. You can do a mix of two. You could say have half of your portfolio in a stock tracking ETF and half in your own investments. It's not always you have to do one or the other. Me personally, I like to be more of an active investor. I like doing my research on my own companies and putting money in stocks or companies that I really like. But obviously at the end of the day, again, you do need to find what's going to work best for you and what's going to be most suited towards you and your lifestyle. But yeah guys, I hope you did learn something from this video and you've started to realise how good or how powerful investing can be. Because I do assure you, if you do just continuously invest over time, you will build your wealth massively. Hope this video made you realise how awesome stock market investing is. If you did, like I said at the start, please hit the like button. Greatly helps me out. Click this circle to subscribe here. Check out this playlist and this video. Got a full stock market playlist here. That's all I have for today guys though. You have a good one.